Everyone is telling you to use AI to scale your firm. Automate your invoicing, automate your approvals, automate your reporting. And they're not wrong. AI can do all of that. But here's something to bear in mind when it comes to AI. According to research from MIT, 95% of corporate AI projects fail to deliver any impact on the bottom line. And it's not because of the technology, it's because the operational model underneath it was not ready. If your capacity is misallocated, your processes are opaque, and your data is unreliable, AI makes all of that move faster, and faster chaos is not a competitive advantage. In this video, I'm going to tell you exactly what has to be true in your firm before any AI initiative delivers real value. I'll explain what AI can and cannot solve, and I'll walk you through the 3 things we check in every firm before building anything. If you get the sequence right, AI becomes a genuine multiplier. But if you skip it, you have an expensive system automating the wrong things. Let me start with what we're talking about because there's a lot of noise in this space. AI workflow automation in the context of professional services means using AI to eliminate repetitive manual tasks in your back office. For example, processing invoices, routing approval requests, automating timesheet entry, delivering documents, and so on. It's the kind of work that consumes hours every week and produces nothing billable. We're actively building these workflows for clients right now. The technology works. It reduces errors and it frees up your team to focus on work that generates revenue. But here's what it cannot do. It cannot tell you which clients are profitable and which ones are genuinely destroying your margin. It can't tell you whether your capacity is allocated correctly or whether your senior people are doing junior work. It cannot tell you if your financial data is reliable enough to make decisions with. Those are all structural problems. AI workflows automate processes. They do not diagnose your business. And just to clarify, I'm not talking about AI agents in this video. AI agents may help address those things soon, but they don't quite yet. Industry research puts a number on where AI implementations break down. 70% of problems are people and process related. 20% of them are integration and legacy system issues. And only 10% come from the AI technology itself, which means if you're trying to fix your AI results by changing their AI, you're looking at the wrong 10%. Before we build any AI workflow for a firm, we check 3 things. Number 1, your data has to be reliable enough to automate. AI workflows depend on data inputs. If your timesheet data is incomplete, if your projects are tracked inconsistently, if your invoices are logged in different places by different people, the workflow will process that bad data at scale. The classic phrase is garbage in and garbage out. That was true in the spreadsheet era, and it's still true now with AI. The difference is that AI runs the garbage through faster and at a higher volume. Before you automate anything, you need to know whether your source data is clean and consistent. That means understanding where the data lives, how it's entered, and how much of it is trustworthy. Number 2, you need to know where your capacity is going. AI automation frees up capacity. It's one of its core value propositions. But if you don't know where your current capacity is being consumed, you don't know what you're freeing up. I see firms where senior people are doing work that should be delegated, where capacity is being absorbed by a handful of high-maintenance clients, where headcount looks sufficient on paper, but certain roles are consistently overloaded. None of that is visible from a standard utilization report. If you automate before you map where the effort is going, you're optimizing around a constraint that hasn't been identified. You may free up your finance team's time while your delivery team is still the bottleneck. The workflow runs cleanly, but the firm's problems are not changed or fixed. The business guru Alex Hormozy demonstrates this perfectly in one of his videos using the pipe. Expanding any part of the pipe other than the most restricted part has no effect on the flow. And number 3, your workflows need to be consistent enough to automate. This is the one that most firms don't think about until they're already trying to build. AI automates repetition. It cannot automate variation, at least not easily. If every project manager handles scope changes differently, if your invoicing logic shifts depending on the client, if your approval processes depend on who happens to be available that week, there's nothing stable enough to build a workflow on. You end up with a system that handles 60% of cases cleanly, but breaks on the other 40%. And someone has to catch all those exceptions manually, which kind of defeats the purpose of the AI in the first place. The workflows that deliver the most value are the ones built on processes that already run consistently. That doesn't mean they're perfect. It means they're predictable. Same inputs, same logic, and the same output every time. If your processes are not there yet, that's not a reason to abandon AI. It's a reason to do the process work first. Map the workflow, agree the logic, remove the variation, and then automate it. That sequence produces something durable, Skipping it produces a fragile system that requires constant intervention, and nobody wants that. Look, I'm not saying don't use AI. I'm saying get the sequence right. Thomson Reuters' 2025 research on the future of professionals found that firms with a clear leadership-backed AI strategy are nearly twice as likely to see direct revenue growth from AI compared to firms that rely on ad hoc adoption. Twice as likely. The technology is the same. The difference is the foundation. Firms that gained the most value from AI automations are the ones that went into it with a clear picture of their operations. They had the data they could trust. They knew where their capacity was going, and they had the processes that were consistent enough to build on. That clarity does not come from instinct. It comes from a structured look at how your firm actually runs, how time is tracked, where effort is allocated, and whether the workflows you want to automate follow the logic that holds up across projects and clients. When you have that picture, automation decisions become straightforward. You know what to build first. You know what the time savings will do to your capacity. You can measure whether it worked. Without that picture, you're guessing. And in my experience, the firms that skip this step end up either automating the wrong things or building workflows that are technically functional but operationally irrelevant. I started this video by saying that 95% of all AI projects fail to move bottom line. That number is not an argument against AI, but it is an argument for being deliberate about when you're going to bring it in. The firms that will use AI most effectively are not the ones who move the fastest. They're the ones who had the data they could trust, who understand where their capacity was going, and who had the processes stable enough to build on. That foundation is not complicated to build, but most firms have not built it yet. And that needs addressing before the technology gets ahead of you. If you want to understand your profit and capacity picture before you start building, that is exactly what our 4-week profit and capacity diagnostic is designed to do. We go through your data, map where the effort is going, we identify where margin is being made and lost, and we give you a clear operational picture you can act on. That will include AI if appropriate. But the starting point is a 20-minute assessment call. It's a working conversation to understand your situation and figure out whether a deeper look is going to make sense or not. There's a link in the description. If this was useful, please do like, comment, and subscribe. And thank you for taking the time to watch this. I really appreciate it.